Well, the new year 2019 is coming up with some interesting scenarios for Nigerian consumers. Of course, we have all our petrol prices at still 145 and thereabout. Diesel remained a little bit stubbornly high. Then we had to fix a number of issues. One, the minimum wage. Then, of course, we're talking about consumer confidence. And we don't know what to do here with the VAT. The government has put everyone on notice that the VAT, your VAT, of 5% will most likely go higher before the end of 2019. Not maybe within the first 6 months until the elections are over, and they'll have a new administration and what have you, and decide what to do. But you need to put all of this together to consider what's in your wallet. Let's get a bit of all of this putting together with Fumi Adibawale, who is one of the economic think tank at Financial Derivatives Company. Good morning. It's good to have you here.
Good morning.
These are very interesting times for consumers, isn't it?
Yes, it is.
If you consider minimum wage makes you happy, I think higher VAT will make you shed some tears, isn't it? Okay, I'm not too sure. Giving with one hand and collecting with the other hand. That's what that looks like anyway. But I'm sure there are a number of burning economic issues now that the new wage bill has gone to the legislature from the executive branch.
Yes, like you said, the minimum wage bill has been forwarded to the National Assembly, but the major issue of concern right now is that the federal government has approved a sum of 30,000 naira per month for federal workers, but the National Council of States approved a sum of 27,000 naira per month for state workers, and this is creating a kind of concern among workers. The NLC have shown that they are not pleased with the disparity between what the state workers will be earning and what the federal workers will be earning. But the thing is, it has been passed to the National Assembly, so the bulk of decision lies with the NASS to take decision whether to approve a unified rate of 30,000 naira or revise downward the wage rate sometimes.
So the squabbles is not over yet.
Yes.
In fact, we're just right in the middle of it.
Yes.
Between 30,000, some states wants 22,000. The National Council of States says 27,000. So we have about 2, 3, 4 different figures being kicked around. Yes. But the bigger issue is that whatever happens, this money will have to be paid. Consumer confidence and consumer spending will be impacted one way or the other.
Definitely, consumer confidence will be impacted. And, you know, the NOI polls have released the consumer confidence index for Q4, and we saw an increase. It increased by about 6.81% to 64.3 points. So this shows that consumers in Q4, they spent more. So what do we mean by consumer confidence index? It is a leading indicator that shows how optimistic or pessimistic consumers are about the current state of the economy as well as future expectations. So what this means is that in Q4, we saw that consumers were optimistic, so they spent more. So when there's an increase in demand, demand, definitely aggregate demand will increase, and that will help to stimulate the economy. But it is important to know that there are 2 variables that constitute this index. There is the current state situation index, and there's also the expectation index. So what is happening is the first index declined by about 10%.
Which is?
Which is the current situation index.
Yes.
It declined by about 10%, while the expectation index increased by about 12%. So it shows that currently consumers are not really happy about what is happening, but they are hopeful that in the future things will get better, especially with the minimum wage approval.
I tell you, if you put hope, if you list hope on the stock exchange in Nigeria, I'm sure it's going to be selling for maybe $1 million or $1 million naira, because Nigerians love hope a lot.
Yes.
If you just list Hope Nigeria Limited and say, well, can we put an index on hope and let us trade it? Nigerians will trade hope. And if you list current expectations, like you rightly said, or current situations, I'm sure that will be what will be a junk stock, because Nigerians are not happy with the current situation. But we're always very hopeful that things will happen, things will change somehow. So maybe someone should just set up design what you call the hope index, and let's see how much that will be tracking. I'm sure that will beat every other stock on our stock exchange if you track in hope. But hope is not a strategy here. Something will have to happen, practically speaking. So going through the your burning economic issues from your team, look at diesel price, still very high. That is not about hope. Diesel is about cash in hand, diesel in your tank.
Yes, Now that we've seen that the current situation is not so pleasing, and the government is also planning to increase the VAT from 5%. So this is not attractive. It is not attractive at this point in time, because the question is, who is going to bear the increase? It is definitely the final consumer. Everybody will bear it. So consumers will be happy with this, because it will reduce their purchasing power. Even when you increase minimum wage, you increase tax, then their purchasing power or disposable income will definitely increase. So with the increase, now we've seen that diesel prices are high at about 240 naira per liter. So that would definitely increase cost of transportation. When you produce, you have to transport. For companies, their operating costs would definitely increase, and this is not good news even for firms.
I'm worried about my cup of tea, because this is going to be the first one. If you get VAT moved from 5%, maybe to 7 or 10%, some suggestions have been we should just take it to 15% once and for all,
wow,
in line with other countries which are also trying to raise revenue. And yesterday, that was a very big issue. And I think this is something everyone out there should start to consider. Yes. If there'll be increasing VAT on new yams, but of course this new yams would have gotten old by the time the new one comes. But let's just check. If we take all of that to the market and look at your market survey, and we notice that some market prices, some products are a little bit on the downside. Beans, cement, tomato, and pepper. All this won't stay this long on the downward trend if this VAT thing. Exactly. Once folks in the market hear there's going to be VAT increase, before the VAT arrives, most likely they will increase their own prices.
Definitely.
Ahead of the VAT. Then we have an issue on our hand as far as we are concerned as consumers.
Yes, what we've seen is that most commodities currently are showing a downward trend, they've declined. But like you said, this is not expected to persist in the long run, because before the implementation of the VAT increase, we expect that manufacturers would definitely increase prices of product, and this will filter even before it is being approved. So we'll see that there could be a reversal in the trend of these commodities. We could start seeing prices start going up before the end, in the near time.
Well, at least for cement, for those who are building at the moment, cement prices are trending slightly lower, just marginally. But then that's some news for those who want to build, do a few things before the dry season is over.
But the thing is, once demand starts increasing, then we should also expect prices to increase.
To rebound.
Yes, definitely. Once demand goes up, prices will have to follow. So if you're planning on building, it's either you get it now, because in the next couple of weeks, you could see an increase in price, and that is bad news in a way.
If you look at tomato, that's a very nice story there for tomato, and I'm looking at towards the end of the page. That's all in green, from about 8,000 naira to 6,550 kg. It's just that you can't store these things for so long.
Yes, tomato is highly perishable, so it can't be stored for a long period of time. But currently, you can still take advantage of what is happening. You can still store it for like a week or 2 weeks, so you can take advantage before you start seeing prices go up, and you have to just take it that way.
Yeah, you got to be the one making the phone call to the electricity company around my area to say, hold on, Bosin's got some tomato in his refrigerator. Hold on a second, folks. Give him electricity unmoved for 2 weeks. Then that would just be good news.
Yeah.
Yeah. So let's take all of this again to a bit of the oil market, if we try to look at the current oil market positions. Where are we with that? It looks like oil is getting a little bit stubborn around $60 a barrel. I'm looking for something to kick it. Not even the Venezuela's head-to-head diplomatic issues with the United States is moving oil prices.
Yes, what we've seen this morning, like Brent traded at about $60.52 dollar per barrel this morning, after it traded at around $86 per barrel in October 2018. So what we've seen is that there are a lot of factors that are driving this increase. There are demand factors and also supply factors. Recently, the IMF released its report, and it reviewed downwards its outlook for the global economy to 3.5% from 3.7% earlier projected in October. So this shows that once there is a decline, this could lead to a decline in demand, and once there is a decline in demand, we expect price of Brent to continue to trend downwards. But we are hopeful, because of the OPEC cuts, that prices will still be within the range of $61 to $63 per barrel.
Quite a lot of things happening out there in the global space. We understand that today the European Central Bank will speak about the state of economy in Europe. Their PMI is not looking good and all of that. So it looks like a lot of externalities we also have to deal with. Talking about our consumer market, all of them will have implications for us. Funmi Adebowale, thank you very much. We appreciate your time here, and a member of the economic think tank at Financial Derivatives Company. So let's take that story a little bit further. In case you missed what the Honorable Minister of Finance, of course, she's the one superintending over all the agencies who are responsible for revenue generation for the government. Yesterday, she spoke extensively on the new strategic revenue generating initiative of the Buhari's administration. This is taking it all the way with a double-barrel attack that the government wants to raise revenue. So how does it plan to do it? And who's likely to get bumped? It was a big meeting. We have all the big boys in the room, the head of all the agencies from customs to Fowler of the FRS and the Debt Management Office, all heads together. These are Buhari's revenue generating team. And let's listen to the Chief Superintendent, the Honorable Minister of Finance, Zainab Ahmed. Let's take a listen to her presentation.
By the issues we have outlined in this administration's economic recovery and growth plan, which include enhancing oil and non-oil revenues, optimizing capital and recurrent expenditures, the management of global as well as domestic risks, working with our colleagues in other economic ministries, departments, and agencies to closely coordinate Nigeria's fiscal, macroeconomic, monetary, and trade policies. Among the focal issues is, of course, revenue enhancement. Revenue enhancement has become a critical challenge in terms of the need to mobilize fiscal resources to deliver on our socio-economic development targets as set out in the ERGP. Given the current fiscal terrain and recent outturn performance in the realization of our budgeted revenue at about 53% by the third quarter of 2018, the fourth quarter figures will soon be ready. We have quite a distance to traverse to cover to achieve the ERGP target of tax to GDP ratio of 15%. Accordingly, His Excellency President Muhammadu Buhari has mandated us to generate more revenues to finance national development, whilst we proactively monitor collections by all ministries, departments, and agencies involved in revenue generation. This mandate is very critical and important, and I have made it my priority. It is also for this very reason that we are gathered here today to launch these revenue generation initiatives. Against this background, let me stress the importance of the launch of this strategic revenue growth initiative, which is aimed at mobilizing domestic revenues as well as optimizing our approach towards revenue generation and collection. Let me pause here to state the problem. We have consistently, as a country, been bedeviled with a pervasive low revenue generation challenge. So it didn't start from now. Although we are celebrated as the country in Africa with the largest economy, translating this wealth into revenues still remains a challenge. We have therefore faced difficulties in mobilizing domestic funds necessary for human capital development as well as for development of infrastructure, both of which are drivers of sustainable economic growth. Our current revenue to GDP ratio at 7% of GDP is very, very low, and it is therefore unsatisfactory, and we have to exert all efforts to make sure we turn this around and push towards the ERGP target of 15% of GDP. The case remains that the same current contribution that we have between oil and non-oil revenues also is reflected between the contributions of oil revenue and non-oil revenues to our GDP. Our analysis shows that while oil revenue contributes 39%, of all GDP, non-oil revenue contributes only 4.2% of non-oil GDP. This is to say that the contribution of non-oil revenue to the wider GDP is very, very low. Our VAT revenue to GDP also is extremely low. It stands at less than 1% today. That, in fact, the actual rate is 0.8%. When you compare these to the average in ECOWAS, which is today at 3.4%, and also if you take the excise revenue, today we have excise revenue of 4.1%. But when you compare it to our neighbor Ghana, the excise revenue is 15.3% of their GDP, and Kenya is at 19.5%. It means we have a very long way to go and a lot of work to do. But this challenge that I've just painted is also the same opportunities that will help us to turn the table in our favor. These opportunities for revenue generation through these strategic initiatives will help us to ramp up and bridge this wide gap. The challenges, as I have indicated, will also be the drivers of these revenue initiatives. Consequently, I am tasking all of us in the Ministry of Finance and of course all of the agencies to work very hard to turn around this challenging situation. If you recall, we commissioned a lab process, and after the lab process we had done a number of engagements with several MDAs, believing in the fact that when you consult from down before you arrive at the initiatives, that is the best process. The essence for us is to make sure that everybody is carried along and everybody takes ownership of these processes, because it will not be the Minister of Finance that will be generating the revenues. It is the individuals in the ministries, departments, and agencies that will push this process. As a complementary endeavor to this, we have also worked with a global consulting outfit, Deloitte and Tush, to bring a different perspective and insights into best practices into this process. As an outcome of the lab process, and also as a result of the extensive consultations, we have ended up prioritizing the initiatives and strategizing them into 3 thematic areas. The first, some of these initiatives we can achieve results in the short term, some in the medium term, some in the long term. The first thematic area is on achieving sustainable revenue generation to optimally collect revenues so we always maintain fiscal buoyancy and fiscal resilience. The second thematic area is on identifying new revenue streams and enhancing the enforcement with regards to revenue collection on our existing revenue streams. The third thematic area is targeted at achieving cohesion between revenue-generating agencies and equipping them with cutting-edge tools and expertise needed to support high performance, so we can turn around our current performance on revenue outturns to meet revenue targets that we are challenged to achieve. Let me pause here to say that since 2016, our general revenue performance has improved, with the customs reporting almost 99% of their budgeted target, and the FIRS reporting 40% compared to the previous year. But when you compare the total performance to the revenue that is targeted in the budget, it is still an average of 53%. So it means we have some pockets that are doing well and a lot of other areas that are not doing well. And we have to work together to make sure everybody is performing optimally. The revenue initiatives that we have been broken into clear implementable portfolios so that each relevant ministry, department, and agency will own this initiative and work towards achieving the target at improving our tax base and also improving our collections.
Okay, that's the new strategies for revenue generation. We've got it, a riot act from the Minister of Finance. All MDAs, everybody on the street, get the money in and right time. Let's check in with the debt market when we come back after the break, and we'll go live to the FMDQ exchange place. That's in 2 minutes.